If you were hit with big losses in 2008, however, perhaps it's time to consider adding managed futures to the mix. And Brendan Lothery tucks us inside one of the few investment home runs of 2008.
While most investments swung and missed in 2008, managed futures were a hit. Managed futures funds are similar to hedge funds. They're run by commodity trading advisors, or CTAs, who attempt to capture trends by going long or short futures contracts in a variety of markets, such as energy, metals, livestock, even sugar. Last year, the trend was a friend to the managed futures space. As other investments tumbled, the average futures fund returned more than 14%, according to Barclay Hedge.
Maybe it's the fear that drives a lot of the markets in crisis periods, and that tends to create trends, and that's where we really capitalize.
What's amazing is this group hasn't posted a down year since 1999, having handily trounced the return of the stock market this decade.
We believe it's solidified a rightful place in people's portfolio, and we believe that people can see the wisdom and the advantages and the diversification that it all offers.
With a track record like this, you'd think investors would flock to this asset class. While money has steadily flowed in the past decade, the last 6 quarters have seen an outflow. According to Saul Waxman of Barclay Hedge, investors have been selling CTAs because they were the only ones who could provide liquidity in the second half of last year.
One of the most respected names in the managed futures business is John Henry, the owner of the Boston Red Sox. His main fund was up 91% last year, and he's about to launch another fund.
Ken Webster is the president and CEO of John Henry & Company. He says managed futures have a place in every investor's portfolio.
And you look at something where you mix a managed futures allocation into an overall portfolio of stocks and bonds, we're able to significantly lower the overall portfolio's drawdown. We're able to lower risk of the overall portfolio and increase returns. And that's something that not too many asset classes actually can say.
CTA managers like John Henry are hoping investors continue to think managed futures are a hit. Brendan Lothery, Bloomberg News.
Managed futures, meanwhile, are displaying their lack of correlation to the equity market. According to data from Barclay Hedge, CTAs are actually down 1.3% through August.